Q&A to ask any questions. Hi, everyone. If you have any questions while we go through this webinar, feel free to ask. We'll be answering them throughout. We will also send you a transcript and a video replay. So in case you want to see anything again, we've got you covered. While we're waiting for everybody to join, let's go ahead and let us know in the chat where you're from. And if you're not one of the listed countries, then yeah, go ahead and, oh yeah. We got people from the UK, Mexico, Korea, like South Korea. Nice. Germany, Israel, Canada. Yeah, it looks like we've got a lot of, I've dealt with people in all of these countries. Ecuador, Japan, yeah. This is great to have all of you here. Lebanon, nice. Pakistan, Denmark. We've got all the time zones covered. Hopefully someday Mars, yeah. Probably at the rate we're going, it looks like it. We'll have to have a tax treaty with Mars eventually. All right, we'll just wait a few more minutes. We'll see when everybody's ready. Oh, we do. And you're right, I haven't seen Africa yet. So you're the first. Jolly old England. Nice to see you. We have a lot of clients in the UK. I've actually had quite a few clients from South Africa, but you're the only ones coming. And we are recording this, so we will send you a replay of this webinar. And like we said, we'll answer questions throughout the webinar, so you don't need to wait until the very end. I will answer some questions at the end. We do provide free introduction consultations. You can find that on our website. We also offer tax planning. So if you're wanting to know how specific things might end up on your tax return, we offer that. But we can definitely, we like to provide the intro consultation so you can get a feel for the way we work and just to give you a general overview of the process. All right, I'm guessing we'll go ahead and get started. I want to go ahead. This webinar talks about a court ruling that happens to provide an additional tax credit for some of you, which is very exciting. Before we get started on the road and the confusing terms ahead, let's tell you a little bit more about myself. My name is Wendy Christensen. I am a CPA, and I've been doing this for over 20 years. I prepare tax returns for individuals, for businesses. I've done them for trusts. I have prepared returns for UN employees, for government contractors, retirees. Pretty much, I've probably prepared a return for somebody like you. I've done returns for people in Thailand, returns for people in the UK, Australia. Again, all that to say that we've encountered a lot of situations, and most likely we know about your situation once you can give us all the details. We're going to run a poll right here to find out a little bit more about you. I think. So right here, are you ready to file your 2023 return? We're a couple weeks into the new year. I'm sure you're ready, right? Have you filed for prior years? Did you just learn you were supposed to be filing? We can help in all of those situations. Are you already with us? I have some clients that have been here 10 years with us, so even longer. We'll wait a little bit for everybody to be able to answer this, and then we'll move on. Okay. So now I want to tell you a little bit more about TFX, right? We are a firm that prepares US tax returns for everyone. We're not excluding anybody. Whether you live outside the US or inside the US, we will prepare your return for you. We have over 80 credentialed tax preparers. We filed thousands of returns, and we have experts with over 25 years of experience. All that to say is we are constantly striving to be the best we can for you and for your tax return preparation. Now that you know about us, why are we here? What are we going to go over? Here's our agenda for today. We will go over this court ruling and provide some top-level information on who it affects and what type of tax it applies to. That's number 3, NIIT and NIIT, if you've ever heard of that. Whether it only works for future years, this just happened in 2023. So does it only apply to now going forward, or can you amend? We'll go over that. And finally, we'll let you know how we can help with the whole process. So what was the news? Why are we excited about this tax ruling? This court ruling happened late last year. Christensen v. US, different Christensen. It was a huge win for taxpayers. It revolves around the use of foreign tax credits and the way tax treaties can be interpreted. If you don't know what any of that means, it's okay. We'll go into a little more detail about both of these items. We'll talk about what a foreign tax credit is, how tax treaties work, and the type of tax this specific court case addresses. So what's the foreign tax credit? As many of you likely already know, if you're a US citizen, you are required to report and pay taxes on your income from everywhere, no matter where you live. So if you live in Australia and pay taxes there, you feel like you'd have to now report your income and pay taxes in the US. It doesn't seem fair. So the foreign tax credit is there to help prevent you being taxed twice, right? So we can take the taxes you pay in Australia and use it to offset the US taxes on that same income. So great, but it can get complicated. because you have different kinds of income and different types of taxes you pay, depending on the country where you live. So this can get complicated fairly quick. For example, if you live, say, here in France, and you have a job and you make money at that job and they withhold income tax, you can offset your US income tax with that same. But you may pay other taxes in France that we cannot use to offset. You also have to think about the income types, right? Where if you have interest or dividends, that is in a different bucket than your wage income. So you can only claim this tax credit on the separate kinds of income, and the different taxes will go towards them. It's a lot, I understand, but we will help you. Your main thing that you need to worry about is you need to let us know what kinds of income you have and what kinds of tax you have paid. We will then be able to put those on the right forms on your tax return. And you just need to note that, as we note on the slide, if you're in France, you may not be able to take the same credits as if you were in the UK. Each tax treaty treats the income and taxes differently. So it all depends on where you live and where you are a tax resident. Now, we talked about how this court ruling affects NIIT. This is net investment income tax. It's easier to say net, so that's probably what I'm going to call it this whole time. This came into effect in 2013. It's an additional 3.8% tax on your investment income. As you can see on the slide, it's your interest, dividends, capital gains, rental income, royalties. It's all of that investment income. This usually only affects higher income taxpayers. As soon as your income is over a certain threshold, you have to pay this extra 3.8% on that investment income. And I know we all have different definitions on who high income taxpayers are. So for your reference, if you file jointly on your tax return, you would have to pay this tax when you make over $250,000. If you file single or head of household, $200,000. If you're filing married filing separately, like a lot of our clients do, it's $125,000. So married filing separately, over $125,000 total income, you now have to pay 3.8% extra tax on your investment income. If you don't have investment income, you don't have to worry about it. But as soon as you have that, you are going to be subject to that tax. Let's go ahead and run another poll here. We have a few questions about your experience with net investment income tax. Do you know if you've had it on your return previously? And if you know you have, do you want to look at having us amend to be able to take advantage? And I'll show you as soon as we're done with this poll where to find this on your return if you have no idea whether or not you've been paying this. All right, we'll give you just a couple more seconds and then we'll move forward. All right, so where do you find this on your return? The easiest way is if you look in your return for Form 8960. As you see, we made Part 3 a little bigger. This is where you will find how much investment income you had, and what tax you paid on line 17. As you can see, this person had about 36,000 in investment income and paid almost 1,400 in tax. So it might be worth you looking at your prior returns to see how much of this you have paid. So to give you an example of how this all works and using the specifics from the court ruling, this is what the Christensens had. They had about 370,000 in income, plus another 100,000 of passive income, that investment income. Their total tax liability was about $76,000. The net tax, because as you can see, their income is higher, so that they're going to have to pay that 3.8% on the 100,000. They had to pay almost $4,000 additional. Now, before this court ruling, they have to pay that 4,000. They might have paid enough tax in France, but they could only offset their regular income tax, not that 4,000. But on their tax return, they went ahead and said, hey, we think we can claim this as well. And the IRS denied it. They took them to court, and actually the IRS later agreed. So now they get to get a refund for that 4,000. This is all because of the way the court ruling interpreted the US and France tax treaty. So how do you understand tax treaties? They can be really confusing. Tax treaties are basically a negotiation between the two countries. They all follow the same basic framework, but because of those negotiations, some countries have more allowances than others. There's a number of countries we still don't have tax treaties with. Singapore, Colombia. I saw one of you in the chat. Sorry, we don't have one in Colombia. Iraq. You also need to note that a treaty that went into effect 50 years ago is going to likely be a lot different than one 5 years ago. Just like with Mars, if Mars comes into play, right, then that'll likely be a much different tax treaty. You also need to note that a tax treaty with a bigger country like Canada may be more comprehensive than one with a smaller country like maybe Poland. So it can all get confusing because they don't all allow the same thing. And they're still a legal document, right? So can be confusing language. And I love this example on the slide because I feel it explains treaties perfectly and the wording that happens. So say, when you're planning a wedding, right, you always need to sit certain people next to each other. And so-and-so does not want to be at the singles table. Your aunt can't sit next to your uncle, etc. Well, in this case, these people are planning a party and you're given those rules. Hey, here's where everybody can and cannot sit. So you see that Bob can't sit next to Susie if Susie sits next to Mary. Okay, so you put down some of that table, right? Then you see that Susie reserves the right to sit next to Mary if Mary sits next to Rob. Okay, Susie, so you think you finally have your table set. Susie's where she can be, Bob is where he can be. But then you read the last sentence. But if Katie is hosting the party, then it doesn't matter. So all that work you just did doesn't matter. Bob and Susie can sit next to each other. Great. So this is how tax treaties work. They can allow things, but then also later on say that, but in this case, it doesn't apply, which is why it's important to have somebody with the experience like at TFX who can help interpret these treaties and help you decide what you can claim on your tax return. What years are affected? We know this court ruling happened last year. Can we do anything with prior years? Well, good news. We've always been able to claim foreign tax credits back 10 years. And fortuitously, I suppose, the deadline to amend 2013 is April 15th of this year. That, if you remember, 2013 is the first year that this tax happened, right? So 13, we can now do all 10 years. But that's cutting it close, right? We only have a few months. As you all know, we get really busy in the next couple of weeks. So I would recommend, if you look at your 2013 return and you see that you paid this tax, I would reach out to us as soon as you can, and we can help you decide if it would be worth amending your return. There are some important things you need to know about this. One, it is only for US citizens. It does not apply to green card holders. Sorry. It also requires we file Form 8833. This form tells the IRS that you are claiming a tax treaty position on your return. So you are claiming that same thing that the court ruling allowed. You are claiming that part and letting the IRS know that is why you're taking the credit. You need to know that the IRS can always dispute this. They may even appeal this court ruling. But the potential for savings for some of our taxpayers is huge. So we want to give you the opportunity to decide for yourself if you would like to do this or not. Here are some upcoming filing deadlines that we want to make sure you are aware of. If you own a business, those are due a month prior to the individual, March 15th. April 15th, if you live inside the US, this is the deadline to file your return. If you live outside of the US, you have until June 15th to file your return. One thing to note, though, is that your taxes are still due in April. So if you're pretty sure you will pay US taxes, or you will owe US taxes, I would pay those in April, and then you can still file in June. As we mentioned, this is also the deadline to amend that 2013 return. So as you can see, there's a lot coming up in April. Make sure if you want us to do your 2013 amendment, let us know as soon as you can. We also provided the link with even more detail on all the deadlines. That way, you can see if there's anything else that applies to you. Now, what happens if you think there's no way I won't have everything I need to file in time? Especially, say, Australia, right? Your tax year is in June, and that's half the year that we need for the prior year. Well, you can always file an extension. This gives you until October to file your tax return. We make the process for requesting an extension as easy as possible, right? You go into your account, hit the button, answer a couple of questions, done. This helps to avoid late filing penalties. It also helps, there are a few elections we can make on your tax return that we can't do if your return is not filed on time. It's never a bad idea to request an extension. And if you have any questions about how to do that or issues, you can always reach out to our support and they can help you do that. Again, we are here to make your lives easier, right? We're not just for expats. We help people that, I have a client that seems to move to a different country every few years, and then every now and then comes back to the US. But through that whole time, we've been preparing his returns. He knows that we're consistently there no matter how his life changes, right? We have decades of experience, and we work hard to make sure that we include all the credits and deductions that are allowed on your return, which is why we are letting you know about this court ruling. We want you to know that this might be an additional credit that you can have. We have a portal where you can upload your documents securely, email where you can email your preparer. We're all in different time zones. It's nice when you can send that communication back and forth. We also have a questionnaire that we have you fill out. They can seem long, but it's a great way to capture the full financial picture. So we can make sure that we're filing all the forms you need, so you never have to worry that you're missing anything. Our goal is to make your life easier when it comes to US taxation. We want you to refer your friends to us. When you do this, we will give you a $25 credit, and your friend will also receive a $25 credit. You can use this for your tax return preparation. You can also use it for a tax planning consultation. I think a lot of people don't realize there is that option where if you sold your rental or had some vested stock and you're wondering how that'll affect your tax return, a tax planning consultation is a great way to know how to handle that. Also, if you own a foreign corporation, right? A corporation outside the US, you know, if you have that, there's a lot of intricacies, right? We can help you determine, based on the country where you live, what might be the best way for the income within that company, how to handle that. So, all right, so I'm going to go ahead and answer a few questions here. But while I'm doing that, please give us feedback on today's session. Let us know how we did, how we can improve. Also, if there's any other subjects that you might want us to talk about in the future. All right, let me see if I can answer a few of these. Whether or not this applies to your US investment income, somebody was asking if this only applies if you have foreign investment income, or does it apply to the US investment income? It depends. It all depends on the country. So I would look first to see if you have this, and you have to have paid taxes in the country where you're living. So as long as you pay taxes in that country and you have any kind of investment income that you paid this net investment income tax. So you remember Form 8960, we will look at it and let you know whether or not this will benefit you, because it all depends on the country where you're living. And somebody said, are you saying that you can file an amended return up to 10 years ago and still get a refund? Yes. Usually it's only 3 years that you can get a refund. That foreign tax credit allows us to go back 10 years. That's one of the perks. That's what's great about this ruling coming when it did, is it allows all 10 of those years. Let's see. You can find a lot of our straightforward fees on our website. Maybe somebody can put that in there for you. And the fee all depends on your situation. If you're a very straightforward case, then we can do it. Let's see. They are taking this into account. We will have to file certain forms for you. We will give you the pricing. So I would say if you come to us and say, hey, will you help me make sure, see what I've done, and then we'll give you the approximate pricing. And then we can go forward from there. All right. Well, As for whether or not this will affect your country's returns, like Germany or the UK, you're gonna have to talk to your preparer there. This is a newer ruling and we'll have to figure it all out as we go. Joan asked if in Germany, we don't get our German tax returns until later in the year. So I can't file yet because I don't know if I will have paid. I would say for the prior years, you will know, right? For 2013, 14, 15. If you're looking for 2023, that's when the extension will help you. And you'll know based on prior years, or you can even come to us previously before the deadline and give us estimates and we can tell you whether or not you might want to pay something. If you're ever concerned, you can always make a payment and then it can be refunded on your tax return. All right. I think we'll probably close out. I hope this was helpful. I hope we can all prepare amended returns and get you some of your money back. Again, just let us know if there's anything else you'd like us to talk about in future webinars. Thank you, everyone.